Max, at the end of the day, this is a Fed story, right? But I've had a countless number of money managers in the same spot where you were thinking, look, this is the emerging markets time. I want to go in. I want to go in. What happens in 2019?
I don't think 2019 probably will be the sort of all clear for emerging market assets, right? I think from a more tactical view, let's say the next 3 months, I think EM still makes sense despite what's happened last week. But let's be clear, I mean, last week we've seen basically global equities fall. DM equities has fallen, not only EM. I would only argue, look, even if we get sort of the uncertainty around the trade tensions, sort of abating, even if we get that, and even if the Fed is repriced then and we get a risk asset rally, the problem then we will have is then obviously the Fed gets repriced, and then the upside both on an absolute basis but also on a relative basis versus developed markets for EM is really capped. So for now, I think it's quite supportive because actually when you look at flows, we'll look at fund flows and we'll look also on foreign investor flows. And both are actually pretty supportive still. So both have recovered over the last couple of weeks, and particularly from foreign investors that are sort of swinging in and out very quickly. They have recovered hugely over the last couple of weeks, and I think that's supportive. But
Max, is it a Fed story? So basically, the big winner out of the Fed policy is probably emerging markets.
Yes, I think the overarching story really is a Fed story. If not on an absolute basis, I think particularly on a relative basis. What you can see, for example, if you look at EM versus DM equities over the last couple of months, really, you put them together with Treasury yields, you'll get a pretty decent correlation there. Now, that may be spurious or not, but I think, look, that kind of tells you what EM or how EM is getting priced. Obviously, there's the China story behind it, but obviously, if we get stimulus there, that actually might be a catalyst for further upside, particularly on an absolute basis. I think for EM, both for the equity side and the rate side. So not only for China, but for EM more broadly, really, because that sort of cushions the sort of growth concerns on a global scale.
Max, do you make a difference between, Latin America and to India to, as you say, China? But is India in a special place?
Yeah. Look, I think on a relative perspective, yes, we can make a difference. On an absolute basis, and from a directional perspective, I wouldn't really make an awful lot of difference. So I wouldn't argue that actually, when let's say 50% of the EM market, let's say Korea or Taiwan or other equity markets are struggling, others can rise by 20%. The overarching story, the really dominant story, as you've said, is the Fed. That sort of gives us the direction, and then we can play around with the relative performance in EM. But the overall, where the direction comes from is really from the Fed, from Treasuries, and from the dollar.